Good morning, everyone. It's your boy Light Manu Chimso, and you're welcome to Light on the Chats. So this morning, I'm gonna be doing a trade, and I'm gonna be analyzing xauusd. I'm gonna be breaking down my strategy, and I'm gonna be showing us how to trade this exact same strategy, and also how the strategy works and why it works also. So first off, we want to be doing an analysis from the higher time frame because this time frame currently is the 15-minute time frame. So the 15-minute time frame is where I get my entries from. So I want to be doing my analysis from the higher time frame. As a day trader, you should be doing your top down analysis from the 4 hour, and then you come to the 1 hour, and then the 15 minutes. So I'm switching over to the 4 hour time frame so that we can see the bigger view of what's currently happening on this pair. So currently you can see my strategy comprises of trend lines, which is this supply and demand zone, area of hesitation, and psychological levels. So first off, I'll start by explaining what trend lines are. Trend lines are diagonal lines of support and resistance drawn on any currency pair, works on any currency pair on the charts that enables us know the direction of the trend or direction of the market rather. So criteria on drawing your trend line, you need at least two swing lows or two swing high as the case may be. So for an uptrend, you need at least two swing lows. So I have my first swing low right here. And then this is the second one. So this is all you just need to plot your trend line. And then as prices advances, you keep adjusting to touch. The more touches you have on the trend line, the better and more valid the trend line is. So you can see I had the first touch right here, I had a second touch right here, and I had a third one right here, the third one, I had another one. So you can see trend lines, I don't usually use the body, I use the wicks to draw the trend line, not the body. You can also use the body or use the wick, but make sure you pick one and don't use the two. And I didn't force it. I didn't force the trend lines to fit my bias. I just adjusted. You can see right here, I've been adjusting the trend line till I got about 5 touches and then a break of the trend line. So price has broken the trend line and now it's back to my area of hesitation. You can see price has hesitated here over time. Got here, bounced off, came back here, hesitated, came back here. It's just been hesitating right here. So what this is currently telling me is that there are lots of buyers here watching this price. So overall, if you look at gold has been in a ranging market. It's just ranging within this range. So what I look out for in a ranging market is I look for a way to catch the top. If I can't catch the top, I catch the bottom. So that is what I'm looking out for. So when I mean catch the top and catch the bottom, I look for a way to catch the top for a sell, and if I can't, I catch the bottom for a buy. So that's what I'm currently looking out for. So price has gotten to my demand zone. So with that being said, I'm going to be explaining a key part of my strategy, which is my psychological level. You can see these black and red lines on the chart. In case you don't know what they are, psychological levels. In case you don't know what psychological levels are round off numbers that banks and hedges pay attention to, and that is where they want to be purchasing price of. So that's what psychological levels are. You can see The first psychological level is this black one right here, is about 3,300. The next psychological level is 3,350. The next is 3,400. Yeah, you can see the next one is 3,450. So you don't want to be putting up so many on your chart, so your chart doesn't look confusing and too much. You remember, you want to keep trading simple and smart. So with that being said, since price has gotten to my demand zone or my area of hesitation, now what I'm currently looking out for is price action right here to determine if I should go long, on gold, if I should go long, or if I should go or if I should go short on gold. So that's what I'm currently looking out for. So on my 1 hour time frame, you can see I plotted my counter trend line. So my counter trend line, now I had first touch and second touch. So I'll only be going long if price breaks out this trend line, retests it, and then I'm gonna be going in for the longs. Or I go short if market decides to retest this trend line, bounce off it, and then drop. Sorry, and then drop and take out this low. That's when I'm gonna be going for short position. So I hope you can gain value from this video. Like, share, and subscribe for more.